So the fiscal monitor does emphasize that now, in 2023, the global public debt has turned up again. In 2020, with the reaction of authorities to the pandemic, public debt shot up quite significantly. But then in 2021 and 2022, we have two of the strongest declines in global public debt on record. In 2023, we see a tilting back up of public debt, and in our projections, global public debt will continue to increase by about 1 percentage point of GDP per year until the end of our projection horizon. To give you an idea of what that means, if we prolong that trend 2 years more until the end of the decade, global public debt would breach 100% of our global GDP. Now, that is mainly caused by the two largest economies, the US and China, that have sharply increasing profiles of public debt. Without the two largest economies, the trend would be down by about 0.5 percentage point per year.
I guess one of the long-standing debates for economists is which one of those is more important. Is it the overall debt stock, or is it the flow of debt in an environment where debt servicing costs have gone up? You mentioned the likes of US and China. From their standpoint, should we be worried about the amount of stock that they're sitting on, or is this more a servicing issue?
Both. So in this type of issue, both stocks and flows matter a lot. We have seen many cases where countries have relatively high levels of debt, but if their policies have credibility in markets, if markets are confident that issues will be tackled, they can actually sustain a very high level of public debt. So there is a very strong relation between stocks and flows. We at the IMF very much support a risk-based, medium-term fiscal framework that manages public finance risks in an integrated way, taking into account both stocks and flows. The fiscal monitor right now, if you go to the statistical annex, has not only information on budget deficits and public debt, but even about assets and liabilities of the public sector. So we are providing information in the fiscal monitor that allows anybody to do this type of overall assessment of public finance risks.
To clarify on